Welcome back to another day in the market, and we're opening up with the NFL because it is opening day of the regular season of the National Football League, so why not? I just putting this out there. It's the ticker symbol NFL. You cannot even buy this stock. It is not the National Football League. It is National Fertilizer Limited. It is an Indian company. You can't buy it, but it's kind of funny to see a stock jump just before, or see this ticker jump just before the opening day of the NFL. Football game of the regular season. I'm just very curious to see if there was some buying there off of speculation that other people might try to get in. Quite interesting though, on the daily, we're actually seeing a buy signal pretty decently. This is a little lower though. Crossing the zero line is here, so maybe that could be a lack of or losing momentum. But I'm not going to spend a lot of time on that because you can't even really buy it on American exchanges. So we're going to start with NVDA. I'm going to start with NVDA because I want to point out something pretty important here. And it is playing out on a grand scale. So this is NVIDIA, and you can see these lines here. So what does it mean when the price action is continuing its uptrend like we have right here with this line, while simultaneously we are going lower and lower with higher lows and lower lows on something like the MACD. You can also draw it out on the RSI and draw it out on the Trendillo oscillator. Well, what that means is a very strong potential of a reversal of momentum, of slowing down of its current momentum. I have a really great video on the MACD where I talk about divergence. Now, bullish and bearish divergence in and of itself is not a crystal ball, and we do not have, unfortunately, a crystal ball for the stock market. But with that said, bullish and bearish divergence is by far the closest that you possibly have beyond even any other indicator that you could put on your radar by itself. Okay, so we have a strong amount of divergence on NVIDIA, all while, if you take a look at Apple is now starting a very significant downtrend. Now we did get, although it was a doji, we got a little bit of a reversal here. I could expect to see Apple come back up to about 182.55 and retest and then head lower. We did cross the zero line in the negative, in the bullish direction on the MACD. So that is showing that we are heading lower. And really what we're waiting for is the bust right through this market bias indicator, and we would love for that indicator to turn red. I believe we're going to have that bounce and then come back down even further. There was news here today. Let's see what the news is. Weakness in Apple weighs on tech stocks and drags broader market lower. If you paid attention to the market today, that is not any newer news. Dow ends higher, but tech slumps, and rate worries add to S&P 500 and NASDAQ weekly loss. Okay, so that makes sense. We talked about that actually yesterday on the channel. So you, if you were paying attention yesterday, you would have got a little bit of a heads up there. And U.S. equity markets end mixed Thursday as traders digest jobless claims data. I unfortunately have not gotten to be able to dive too much into the job data. We will do another video on that shortly, but I'm not going to sit here and read it in front of you today. A couple of things to think about is earnings. Earnings are going to be coming up. Now, it is a ways away. It's October 26th for Apple, but I want to start planning, and I think other traders really, if you're watching this channel, you should start planning. How are you going to play the next earnings? Now, obviously, I've said it many and many times before, and I'll say it again. You ideally do not want to hold a position through earnings. With that said, you can play leading up to earnings, and you can have a plan for after earnings as far as where the technicals are. This very likely could sell off till, maybe the beginning of October-ish, and then start to pump leading into earnings. And that's just something to pay attention to. Maybe if the technicals are right, and you see that there is a continuation to the upside. You can play that on that short term. Just keep in mind this little purple E right there. Okay, so we got Apple, NVDA. We can finish up with Bitcoin, BTC, USD. And here we go. So this has just been kind of slumping along, nothing too crazy. We are at, let me just zoom this out a little bit, move over. We talked a little bit about having a good amount of support right here if it does actually reach that point. Something to keep in mind, just very recently, we have a little bit of a divergence to the upside on the MACD. If we zoom in, see we're going up right here while the price action is going down. It's nothing too crazy, but it's something to keep in mind, because if we see that bounce, well, we are above, at least on the daily, we are still green on that market bias indicator. So if we see the MACD line, which is this blue line, cross back up above that 0 line, and you see the price action go above, right here, above these moving averages, and you see the blue moving average go above the yellow moving average, that would be a really good point to enter. Even if you believe in the near future it's going to go down, it's a safer play. It's a good spot to get in and then DCA from there. And as I talked about before, 19,482 would be a really good spot to enter as well, because there is a lot of consolidation. And really, honestly, too, if it gets down back to 16,267. And that's the thing here. Let's just draw a line really quick just for the heck of it right here. That is not, either of these lines are not very far away. And those are pretty significant floors. There's a lot of volume there. I don't have the VRVP on that list, so I'm not going to bring it up. But you would see some pretty big consolidation right here. And it has been tested. You could even, I mean, so it tested twice here, and it's been tested significantly right along here. And so moving forward, I mean, that's not a good launching pad for the next bull rally, because in the long run, if we go up to the monthly and we pull the log scale on, that is not the log that I want. That's the log that I want. We could zoom in real quick. You can see our lines. Now, we're kind of looking at something like this. We have what seems to be this arc, and it looks very roughly like something that probably is going to go like that. Well, maybe even a little bit more up, though, because we're going to get like this, right? So, and that could bring you up to, I mean, that could bring you up to, let's see, whoops, drawing a line here. Let's get rid of that. That could bring you up pretty significantly up to, dang, 209. I mean, even right over here, you're at 85.90. So in the grand scheme of things, whether you're buying in at 26,000 or 16,000, does it really matter? Not really. I'm going to end it there. If you like this content, please hit the like button. It's the easiest way to help out the channel. Otherwise, if you just want to see more, hit the like button. Well, hit the like button, but also hit the subscription bell and hit the notification bell so you can see all of my latest content. Till then, we'll see you next time. Thank you.